mean, look, it's not like Jamie Dimon is struggling for money. What does this pay rise mean for him? Why give him this bump higher?
Well, I think it's, good morning, by the way. I think it's to do with the pay pressure throughout Wall Street. I mean, there's a couple of things going on here. There's a lot more money going into basic salary from the junior ranks right through the middle and up to the senior level, as well as this year, a huge increase in bonuses across the board, really, for a lot of investment bankers. And I guess this comes on the back of some relative restraint in 2020 when people weren't sure exactly how the pandemic was going to play out, how it was going to affect the economy, whether the kinds of revenues that banks were making was going to be sustainable. So pay was relatively contained 2020. 2021, we've seen a boost everywhere. We've seen some special bonuses for Jamie Dimon. We've seen some special bonuses for David Solomon and John Waldron at the top of Goldman Sachs as well. And we've not seen quite so much of an increase going out to shareholders in many of these banks, which is one of the interesting things that's gone on this earnings season.
Yeah, and we've obviously seen the bump up in junior banker pay as well, $110,000, I think, at one or two of the institutions. Look, Wall Street sometimes sets the tenor, more so for the French trading FICC banks tonality than it does for the Swiss. But how do you think the Street is setting up the European outlook for the bank season?
Well, I think it's going to be quite similar to what we've seen in the US in terms of the revenue performance. Obviously, fixed income, the fixed trading divisions has been down heavily, and that's widely expected for most of the European banks. The M&A and advisory work on IPOs and so on is going to be okay. It's not going to be as good as the US players. And I think what we've got from Bloomberg Intelligence is a forecast of, across the big Europeans up about 4%, which compares to about 28% improvement in revenues for advisory of the US banks. The interesting thing will be equities. And the reason I say that is because it's been quite a mixed picture in the US. The falls in equity trading wasn't as hard for many of the US banks as it was for fixed income. Some banks like Morgan Stanley did very, very well. And in Europe, what we've had is, BNP taking on prime brokerage business from Deutsche Bank last year, taking on the full earnings and revenue of Exane, which is one of their divisions. And they're going to do much, much better than they did in 2020, in part because of that. Barclays did very well in equities this year up to the third quarter so far. So their equity division has drawn level pretty much with their fixed income division for the first time. And then UBS, of course, similarly to Morgan Stanley, is much more exposed to the wealth market, is much more exposed to Asia, and so their equities revenue might be quite good as well.